Cześć, dzień dobry, witam Was bardzo serdecznie. Artur Wiśniewski, stockbroker.pl. Witam Was na pasywnej rewolucji 58. To jest liczba spółek gamingowych, która jest notowana na warszawskim parkiecie, na giełdzie papierów wartościowych w Warszawie. Warszawska giełda jest liderem, jeżeli chodzi o liczbę ETF, liczbę spółek gamingowych notowanych na parkiecie. Niestety większość z tych spółek jest mało płynna i pojawia się pytanie, czy zamiast inwestować w pojedyncze spółki, nie lepiej skorzystać na przykład z funduszu ETF. Zbliża się GameDev Inwestor, to jest konferencja organizowana przez Przemysława Gerszmana oraz Tomka Jaroszka. Jej najbliższa edycja rozpoczyna się 27 listopada, odbędzie się w tym dniu. I do dotychczasowych wykładów na tematy gamingowe będzie dołączał, pojawi się nowy wykład, którego autorem będzie Martijn-em Rozemuller, osoba, która jest odpowiedzialna w firmie VanEck Europe za zarządzanie funduszem, który jest chyba jedynym w Europie funduszem skoncentrowanym na sektorze gamingowym, VanEck Vectors Gaming and eSports. Martijn-em Rozemuller będzie też moim gościem podczas rozmowy, w której zapytam go o wielkość sektora GameDev oraz o to, czy lepiej inwestować w pojedyncze spółki, czy w konkretny ETF, który dywersyfikuje inwestycje. Serdecznie Was zapraszam. Hello, Martin. How are you doing?
Hi, Arthur. Thanks for having me on the show in the interview. I'm great. I hope the same for you.
I'm so happy that I can have you here again. Last time we had a conversation, it was really high. It received high rates from our audience, so I think people like you. So I guess it will be similar this time again. 58. This is the number of stocks, of gaming stocks listed on Warsaw Stock Exchange. Warsaw Stock Exchange is the top leader, world leader in terms of number of stocks, gaming stocks listed on the main market. But the question is if Poland is really a world market leader. So what is the world market size? I mean, the gaming market, gaming stocks market. Is Poland really a leader? How does this market look like?
Wow, that's a great question. I just try quickly to remember how many of these Polish stocks are actually in our ETF. Probably less than the 58 that you just mentioned. If you look at the total number of stocks in the ETF and how they are distributed, then it's 1.3%. That is actually Polish, so it's probably not all 58. In our ETF, it's mainly the US, but also Japan, China, Taiwan, South Korea. So there's a lot of those components. But Poland actually is one of the countries that is mentioned separately. So I think that is by itself already a feat. For instance, the Netherlands, where I'm from, it's not even mentioned. Apparently, we don't have that many gaming companies here. So on the total market, if you look at the total size of the market that we invest in, it's a little over 100 billion in dollars. So it's substantial, but that's only the part that we invest in.
If I'm a Polish investor that wants to have exposure to gaming sector, as I said, I can easily reach for 58 stocks which are listed on Warsaw Stock Exchange. But unfortunately, most of them are quite unliquid. And the question is, what is the reason to invest in ETF, or is it better to invest in stocks directly or on the stock exchange, or maybe choose an ETF? As I said, on one hand, we have low liquidity in in the Warsaw Stock Exchange, but on the other hand, if we invest in ETF, we take the currency risk because we invest in foreign stocks. So, what is your opinion on that? Is it better to pick stocks or take ETF?
Well, that's a great question. While you were asking it, I was already trying to write down a couple of the things that I really like to mention here, to make sure I don't forget anything essential. I think a starting point in all of this, in this decision, should usually be the personal conviction of the investor. Now, I know that, and this is not only for the gaming theme, but it's for many different themes or sectors. Sometimes an investor has a really strong view on the market and has a really strong preference for some of the companies in that market. And I think if that's the case, then probably it makes sense to at least invest in a couple of companies that, as an investor, you feel very strongly about, even though it's obviously always difficult to only find the good performing companies and leave out the bad performing companies. So even in this case, I would still advise people to have a certain amount of diversification, because no matter how well you know the gaming sector and no matter how well you're able to research these companies, there is always the let's say the possibility of a surprise, and usually a surprise is negative and not positive. And maybe to give a little bit of indication on that, as I may have told the previous time I was on the show, before getting into the ETF business, I was a trader on the options exchange here in Amsterdam. And one of the companies that I traded options in was Ahold, which is a famous large supermarket chain. And it was always considered to be a really safe company. So you could really easily invest money in it because supermarkets, everybody needs to eat. It's very safe. And I thought I knew everything about this company because I did a lot of research. And I thought no way that I could be surprised. But in 2003, Ahold got mixed up in a sort of a scandal in the United States where they also had a subsidiary. I was very surprised by this. I didn't know it. The stock took a big hit, went 50% down. So basically, that's where I learned. Even though you do a lot of research, even though you think you know the market, even though you think you know the companies, you can still be surprised. So if you want to select this gaming stocks yourself, make sure you have at least enough diversification. Then on the liquidity, I think it's always important for an investor to have the ability to go into the market, but also to go out to the market if they want to realize profits. So liquidity is of course important, but it's especially important for us as an ETF issuer because we need to be able to buy and sell the stocks in the ETF immediately if we have to do a creation or redemption. So I think one of the benefits for an individual investor who has a strong opinion on certain smaller stocks is that if you are a retail investor and you have a preference for a small company, you can take your time in buying into the position. You don't, as we have to do, you don't have to do it immediately. You can be patient. So I think what I like to say about this is the big difference is that as an ETF issuer, we cannot have the illiquid stocks because we have to trade immediately. For a retail investor who's patient, it's possible to have these illiquid stocks because, well, he has time or she has time. So that sort of brings me to the next topic. I think costs are also very important. If you are trading a lot of different companies by yourself, you have to, well, do multiple trades, which is more costly. If you buy an ETF, you only do one trade. It's usually more cost effective. Then on the currency, yeah, that's something, of course, is really hard to avoid, because if you buy the ETF, yeah, by definition, you would buy into US stocks, Japanese stocks, Chinese stocks. You have the currency exposure for sure. But then again, if you look at the Polish stocks traded on the Warsaw Exchange, I'm assuming some or maybe even most of these companies will have exposure to other markets in Europe, maybe even markets in the US or Asia. So till a certain extent, they also have currency risk, because some of their turnover comes from other countries, most likely. So the currency risk is something that probably is there all along. And what you probably need to do as an investor is also, in that case, make sure you are diversified. So not too depending on one currency, but make sure you have a number. So yeah, I think that's sort of covers the most important topics on this. And in the end, maybe, and this obviously is a bit of a easy answer, but maybe for investors, it's the combination. If you want to invest in this sector, you can have the ETF as the core of your investment, and then you can maybe choose a couple of specific companies that you really believe in as additional exposure, and then you both have the diversification that you need to be sort of, well, to have less risk, but you can also have those really specific companies that you believe in personally.
You started the topic of diversification, and I wanted to ask you about that. But before I do it, I'll display a chart which shows the performance of your ETF. This is the blue one in the middle, ESPO. And we also have on this chart visible 4 other instruments, which are stocks, the biggest stocks, gaming stocks on Polish Stock Exchange, which are CD Projekt, 11-bit, Playway, and 10 Square Games. Actually, one of these is also the part of the index which you are following. I mean, CD Projekt, it's like 1% of the index. So as we can see, there were stocks which were in this period better or worse than the ETF. But the question about diversification is, asking about diversification, I want to quote Warren Buffett. He said that you should concentrate. Those who diversify are fools. They simply don't know what they do. But on the other hand, he also says that most of people should invest in a passive way, and he recommends to buy S&P 500. So is it a good idea to diversify or concentrate the portfolio?
Well, it's a great question, and a nice idea to bring Warren Buffett in the discussion, because I think I really admire him. He's obviously a great investor and has a long history of doing quite well as an investor, being by now a little bit older and probably wiser than most of us. It's always good to listen to his quotes. I think it's interesting to hear him talk about diversification, because if you look at his own investments, Berkshire Hathaway, I'm not sure at the moment, but usually has like 50 to 70 different investments, which probably in his mind is quite concentrated. But in my mind, it's also quite diversified, actually. So I think a lot of what he does is very similar to most ETFs, in the sense that, well, 50 to 70 investments means, in my book, it's well diversified. He's really keen on keeping costs low. He's really keen on being rules-based. So he doesn't really trade that much or that often. He has a conviction, he sticks to it, he follows his own rules, and he's really good at keeping his emotions out of the way of his investments. So he's also known for the quote that when everybody is fearful, you need to buy. But when everybody becomes really optimistic, maybe it's time to sell. So he tries to sort of get rid of his emotions in his investment process, which I think is a really good thing. Now, going back to diversification and the theme of video gaming and esports, I believe that, well, in our ETF there's 25 positions, which according to Buffett probably is a concentrated approach, not that diversified. In my book, 25 positions is diversified, and especially because I always tend to look at an investor's portfolio taking the whole portfolio. And my assumption would be that if somebody wants to invest in video gaming and esports, it'll be with a small portion of the portfolio, not the whole portfolio. And if, let's say, video gaming and esports is maybe 5% of the portfolio, then having 25 companies in there is well enough from a diversification perspective, because those 25 companies are only 5% of the portfolio. So if you would do 25 times 20, you end up with 500 names in your portfolio, which I think Warren Buffett would agree is both well diversified enough, but also maybe focused enough, because in the end 500 names is exactly what he would suggest to people buy the S&P 500. So yeah, I think that's sort of my response to that, and yeah, I guess I pretty much agree with Warren on his quote.
I will have a last question to you about active and passive strategy investment. And this time I will also display a chart. This one shows the last 3 years of the ESPO, your ETF, which is the blue line, and the orange one is all countries world index. And if we look at the chart, we can see that they both grew in that time, but the ETF, which is ESPO, it grew much more. But it was a good time for stock exchange, for stock market. I think I can imagine that when it comes to the bad time, when there's a decrease in the market, I can imagine this ETF falling even more than the wide market. If we count the beta indicator, I guess it would have a high beta score. So my opinion is that these kind of ETFs are really good idea for active investing, like trend following, because in these strategies, the best instruments for such strategies are those which really have strong trends, and this seems to be perfect for the passive attitude. So what do you think? Are these kind of instruments better for passive or active investing?
Well, there's actually two ways to look at that question. Let me sort of try to rule out what I think is not how you mean it. So I think you could look at active or passive from within the theme or from within the instrument. So basically either follow the video gaming and esports index that we have, and therefore buying the ETF and just follow the theme in a passive way, or trying to find the right companies and be very active in how you invest in this. I think this is not what you mean, probably. I think what you probably mean is, as an investor, you can be active in wanting to invest in the video gaming and esports theme now, or maybe in 3 months, or and have an active approach to what part of your portfolio would be in video gaming and esports, or maybe hydrogen economy or digital asset applications, stuff like that. Now, looking at the question from that perspective, I think you're right, and I think the graph really showed that it can make a big difference. If you take this active approach in your portfolio and at the right moment allocate something to video gaming and esports. But at the same time, I'd like to point out that in the graph, we clearly saw the beginning of the COVID pandemic. And the COVID pandemic, early 2020, made sure that both of the lines went down. But the video gaming and esport line didn't go down so much, and it also rebounded a lot quicker. The reason for that is that even though the COVID pandemic is obviously really bad news for global society and has had a lot of negative effects for the human population. It also made people act differently. It also made people, well, having to work from home more, interacting online more, maybe playing video game more. So the whole industry that the video gaming and esports represents became much more popular because of COVID. And I guess this is something that no one could have predicted. Obviously, no one predicted COVID, so that's one thing. But also the effects that it had were probably hard to predict. So even though I think it makes sense as an investor to try to have a view on the future and try to set up your portfolio in a way that it will make use of the way you see the future, it's also really, really difficult. Another example, for instance, would be SMH. We have an ETF that follows the semiconductor index. Now, there's obviously a lot of people that expect that the semiconductor industry will grow a lot in years to come. Part of it also initiated by COVID, I guess, by the idea that more will be done online, and you need chips to do that. So, well, semiconductor companies should flourish. But then there's also this other way of looking at it, and that is there could be a new technology coming along that would sort of change that whole idea. I don't see anything happening soon that will replace chips, but yeah, who knows? So it's very difficult, and I guess that's basically whatever way you look at active investing, it's really difficult to predict the future in the right way, and it's also very difficult to predict how the markets will respond to that future. So I think in the end, although it's good to think about it, I think most investors are best off if they also in this case have a diversified approach and not put too much emphasis on one or two themes or one or two sectors, but also try to be a little bit diversified there.
Thank you very much, Martin. Thanks to everybody that you spent these 20 minutes with us. If you are interested in investing in gaming sector, in having an exposure in GameDev with the ETF, I recommend you to join the GameDev Investor on the 27th of November, which is next week. Martin, thank you very much again that you found time to have a conversation. It was very nice of you, and I really enjoyed it.
Thank you. I like being here.
See you next time. Bye bye.
Bye bye.